I'm Charlotte McLeod with the Investing News Network, and here today with me is David Erfle, editor and founder of Junior Miner Junky. Thank you so much for being here. Great to see you.
Always a pleasure, Charlotte. Great to see you too.
Nice to see you in person as well. We haven't been in person for a little bit.
It's been a while.
Yeah. So let's start by talking about gold. We are in March, but we're coming off of February that really wasn't very good for the gold price. So maybe you can tell me what you saw happening there this past month.
Yeah, it's been a roller coaster ride to start the year. We lost pretty much everything that we gained in January, but coming into the year, the gold price was already on a nice roll with Eastern central banks trading in their treasuries for gold. U.S. Central banks have been buying gold at the largest pace in over 50 years. So that's a big reason why the gold price went up so much from the lows of 1620. So the gold price went up basically about $355 in 3 months, and then it made a 50% correction of that move in less than a month, actually. So coming into March, though, we're having a bounce, an oversold bounce. The gold price came down and tested around the 1800 level. There's pretty strong support at 1780, 1800, and the 200-day moving average is there, and the gold price actually bounced off the 50-week and the 18-month moving average into February, into the end of February. So it's basically it's consolidating a huge move.
I always do like to get that technical perspective from
Absolutely.
You, because you look at the charts, which not everybody does. So we've got that support level down there. Where do you see resistance for gold looking forward?
Well, it's interesting. We saw gold close above its first resistance level, which is about the 1850 area. We had a close on Friday in the COMEX above 1850, and then it added another $10 in the aftermarket. So the next resistance level, good strong resistance level, is 1900. So if we get a weekly close above 1900, I mean that would bring more bullish sentiment back into the market.
Do you usually extrapolate much out from the month to month into how we're looking for the fall of 2023 year?
Oh, absolutely. The monthly close is very important. Take, for example, the $2,000 price level. That $2,000 price level has been an area of resistance, strong overhead resistance for over a decade. We've had daily closes above 2,000. We've had weekly closes above 2,000, but we've yet to have a monthly close above 2,000. So once we have a monthly close above $2,000, I think then we're going to have the move that everybody's been expecting.
Okay, very interesting. So important to look at these technical perspectives on the gold market, but beyond that, if we look at what's going on elsewhere in the world, there are so many different factors affecting gold. So I hoped that we could talk a little bit about that and what you see as the main drivers for gold this year.
Yeah, well, on the upside, as I mentioned before, the central bank buying is pretty huge. It's been interesting because you're seeing ETF sales continue to fall. That's retail money selling their gold, but then you have the central banks buying that gold. So that's what you want to see. You want to see the weak hands get rid of the gold, and you want to see the strong hands buy the gold. So that's basically what's been happening. And on the downside, of course, we have these higher interest rates that everybody continues to expect to go even higher, and Treasury yields going higher. But the Federal Reserve, as we all know, is stuck between a rock and a hard place because of all the debt that's coming down the pike here. The U.S. deficit now is $31.5 trillion and continues to exponentially rise higher. And now the debt payments to service that debt will now be $1.3 trillion this year alone. And because if you have the Fed funds rate over 5%, which is probably going to happen here in a couple of weeks, they're going to raise the Fed funds rate to 5%. Those debt payments become even higher. So they're between a rock and a hard place, and the gold price is beginning to sniff this out, I think.
Okay, a number of avenues that we can follow down there. So sticking first with the central banks. So they started to, it seems, buy when the price was a little bit lower. What happens now that we have a higher price? Do they mind, or are they a little bit price agnostic?
Well, the World Gold Council came out with the numbers in January, and they continue to buy. You see, China is the main focal point, is what everybody's seeing, watching them continue to trade in their U.S. treasuries for dollars, and it makes sense because China sees the U.S. take Russia off the SWIFT international system, and they're concerned about what they're going to do with their dollars, and all these other central banks as well. If they're aligned with Russia's interests, they're worried about what's going to happen with their dollars, so they're trading it in for gold, which makes sense.
It does. So there's a concern there of this could happen to us as well. We don't want
Absolutely.
that to happen. All right. And so, of course, the other thing that everybody is watching right now when it comes to gold is the Fed and interest rates, as you mentioned. So we are, I think, at this point about a year out from the Fed's first interest rate hike. So maybe we can talk about what we've seen during that time and what we may see going forward into 2023, although that's kind of a tricky question.
Sure. The major thing you've seen, obviously, is the U.S. dollar going up so much. But the gold price has handled that really well. I mean, the gold price has basically gone nowhere. Even though it's taken us on a roller coaster ride, it's basically gone nowhere for over the past year. I mean, it ended 2022 basically where it began. And the gold price now is trading above 1850 again. So, but of course, the reason why the gold price continues to go sideways is because people are concerned that these rates are going to remain higher for longer.
And is that also what you would expect?
Well, basically, I expect the Fed is going to have to pivot here pretty soon because the stock market is beginning to roll over now because all these costs are being passed down from these companies down to consumers because the commodities continue to rise and make their costs higher to make their goods, and it's being passed on to the consumer, and they in turn the consumer has to take on more debt to keep up with feeding their family basically and housing them, which all these prices continue to remain high. I mean, you've had a Federal Reserve that basically told us that inflation was transitory while it continued to go higher, and then by the time they finally did raise interest rates, it was basically but a lot later than they should have. So if they pivot a lot later than they should have, then it could be even worse for the economy. So basically, the gold price is sniffing out that the Fed is eventually going to have to pivot, and for gold, throughout history, it always does what it should do, but never when we expect it to. So basically, that $2,000 price level has been a strong ceiling for so long that once it finally does become a floor, I wouldn't be surprised to see to see gold take off towards 2,500 rather quickly.
Okay, I like that. I don't know if I've heard that. It does what it should do, but not when we would expect it. We should remember that one. So with regards to inflation, it seems like we're heading toward a point where maybe we just end up, well, not we, but the Fed ends up just accepting a higher level than they want to. So is that?
That's a great point, yes, because they have this fantasy, continue to project this fantasy that they can get the inflation rate back down to 2%, which I think is an impossibility, and I think the gold price is sensing that as well. So they're going to have to raise that target, and we're all going to have to deal with those consequences.
So one of the topics I think that we cover each time we speak is what's going on with the gold juniors. We have this environment that's warming up for gold, and they have not really necessarily caught up yet. So what's going on there? Are we going to see that finally change? Oh yeah,
well, it all comes down to that gold price going sideways for so long, while everything else has gone up in price. The cost to get it out of the ground, the cost to drill for it, the cost to produce it, the cost to build a mine, all those costs are going higher while the gold price is going nowhere, which brings more and more apathy into the junior sector. So basically when you have the majors coming down and having to deal with those aspects of higher gold, higher all-in cost of production. All-in cost of production have risen now close to an average of $1,300 an ounce. So basically, the juniors, that they're going to have to end up going to the juniors to replace their ounces, and it's starting to happen. Usually at this PDAC conference is when it kicks off a wave of M&A. Well, the wave of M&A has kicked off a few months prior to this conference now. So that's very good news for the sector.
Yes, that is on definitely my list of things to talk to you about, is this wave of M&A that we have seen coming in 2023. So thoughts on that? Are you liking any of these deals? Do they make sense to you? Or are we going to see more?
Some some make sense and some don't make sense, but that's usually the case.
The usual mix.
Yes,
yeah.
but the big one that everybody is talking about, of course, is Newmont attempting to take over Newcrest. Newmont is the number one largest gold producer, and Newcrest is the number 6 largest gold producer, and they're very familiar with the company, obviously, because it was spun off of Newmont over 30 years ago. So I wouldn't be surprised to see Newmont's 4th offer to Newcrest come after this conference, because basically, if this deal ends up going through and taking place, it will basically take Newmont into a whole new level of gold producer. They'll be the mining behemoth of the industry. They'll be producing nearly twice as much gold as the second gold producer, which is Barrick, who was formerly the largest gold producer in the world. I mean, here in PDAC in 2018, a wave of M&A was kicked off by Barrick taking over Randgold. And then I think it was about a month later, Newmont announced the takeover of Goldcorp, which turned them into the largest gold producer. And the Barrick has slowly gotten lower as far as in relation to Newmont's gold production. So I wouldn't be surprised if Barrick announces something here, also, because Mark Bristow, the CEO of Barrick, has been one of the loudest proponents of M&A needing to happen in this space to attract generalist investors. I mean, that's the number one goal here of this sector right now, is to attract generalist capital, because generalist capital basically left this sector in 2013 and they haven't returned. So they've been gone for about a decade. We've just been basically trading amongst ourselves, especially in the junior space, and it's been very tricky. But it has been lucrative if you catch the waves higher, and I've done well, and my subscribers have done well.
Yeah, we're talking on the first day of PDAC just in the morning, and it is a little unfortunate that we're not talking a little bit later, because I do also kind of wonder if we're going to see some announcements at this event. So we'll be watching for that. Now, I want to talk a little bit more about these M&A deals, especially these really big ones like you've been talking about. I hear a lot of different opinions on whether bigger is better. What are your thoughts? Because obviously there's advantages, there may also be disadvantages.
Well, it comes down to attracting that general investment capital, and bigger is better in that sense, because your generalist is looking for a gold company that they can invest in, that they can trust, that has growth production, and they pay a good dividend. I mean, Newmont pays a nearly 5% dividend now. That's basically unheard of in this sector. We haven't seen a 5% dividend in a gold stock. I've never seen it. I've been in this sector for 20 years. So that's what they need to do to attract investment, and they also need to continue to keep their growth pipeline filled with more production, because each ounce of gold that they produce is one less ounce that they have in the ground for future production. So that's why we're starting to see this M&A filter on down, when we saw B2 Gold announce its acquisition of Sabina. So I expect to see more of that, and it's even filtered on down into the micro juniors too. A few of them have been taken over recently.
That is exactly another thing that I was going to ask you, is the flavor of more M&A in 2023, because you can only do so many super big gold deals. So you would anticipate that trickling down.
Absolutely, yeah. Yes, it needs to happen. It's needed to happen for quite some time. A lot of these companies need to be consolidated. They're working in the same areas, and to attract more capital, they basically need to merge.
Okay, and so the key question that I think investors want to know is, how do they approach this type of environment, right? So what are you doing in this M&A type of environment, or even in general in 2023? How are you approaching it? Well,
myself and my subscribers, we painstakingly accumulated a basket of juniors into the end of last year, basically because I strongly believe that the gold mining sector bottomed in late September, because there's a 7-year gold cycle pattern since the turn of the century, since 2001. We had a major bottom in 2001, in 2008, in late 2015, and I believe we had a major bottom take place in late September of last year. So I've been accumulating late-stage developers, exploration companies, but I've crossed off on my list quite some time ago very early-stage companies that are still looking for gold for discoveries. I basically am not investing into anything that does not have a high margin, deposit already defined that they're de-risking. So, because basically there's really no reason to invest in companies that are looking for gold when the companies that have already found the gold are trading so cheaply. I mean, it always happens in this sector when we have, at tops, we have extreme valuations at the top, for ounces in the ground. We have companies like during the last peak in the sector, companies like Frontier Gold being taken over for $1,200 an ounce in the ground, Redback Mining in a top, not in a top tier jurisdiction, being taken over for $1,000 ounce in the ground. And then on the flip side of that, now we have these juniors that are de-risking these projects with multi-million ounces of gold in top tier jurisdictions, trading for less than $10 an ounce in the ground. So that's basically when you do your harvesting. At times like this, when that's why it really pays to be the ultimate contrarian in this sector. And that's happening right now because the apathy has reached the lowest level in the junior sector in over 20 years. I mean, the last time that the venture traded volumes at this level was in 2001.
I think that's really important to remember. So for people out there watching, you don't have to go too risky right now to get very good value. So that's a good tip. Now, we're here at PDAC. There's a lot of companies that are out there on the floor. I wonder if we could talk a little bit more about maybe the kinds of questions that you are asking to companies when you're deciding, do I want to put money into this company?
Well, the first question is what you alluded to at the end of your question was putting money into the company. Are the management teams putting their own money into that company? Are they taking place in the financings? Do they have the access to capital for the financing? Is their share structure, still pretty tight after what's been happening in the sector for the past few years? These are questions that you need to start off with, because basically what I do for my subscribers in my service is I invest in all the companies that I recommend. My subscribers know exactly what I paid for them and how much I made, how much I lost. All my trading action is conveyed to my subscribers, and I also tell them in advance what company I'm going to be purchasing. So I expect the companies that I'm investing in to basically do the same thing. If they're not investing in their own company, why should I?
Exactly. So I think that we can probably be wrapping it up here, unless you had any final thoughts that you would leave investors with as we're heading into 2023.
Well, basically, just a little more patience. I know that's been something that we've talked about for quite a while. You have to have patience in this sector, but this is when you want to be buying companies right now, when there's so much apathy in the sector and there's so much undervaluation in relation to the price of gold. Because basically, if you're not buying fishing lines and selling rhino horns in this sector, then you're not making money.
Okay, well, we'll leave it there. Thank you so much for coming on to talk about what's going on in the gold sector right now. I think it was really useful for everybody out there.
Thanks again for having me, Charlotte. Always a pleasure.
Of course. And once again, I'm Charlotte McLeod with the Investing News Network, and this is David Erfle with Junior Miner Junky.